Hello, good evening, friends, and welcome all of you to this Board of Internal Audit and Management Accounting. And this is our second series of webinar this year. And we have with us CA Purav Ghala, who is expert in himself and taking the topic on the red flag, identifying the red flags in internal audit, having the vast expert knowledge on this subject and a very dear friend since so long and moderating this session CA Meera Joycer, who is also very dear friend and I think this is a really great value added series which will not only upgrade the knowledge but it will be useful in our routine internal audit when we are performing this internal audit task at various levels. So, as a board of internal audit friends, we are revamping all the standards on internal audit and we are interacting with various regulators also so that these standards are getting implemented and making it mandatory over a period of time and reaching out to all the members to upgrade their knowledge, disseminating the knowledge and adding the value to the knowledge so that the members can actually perform the best in this area. And I also request all the participants, if you have any suggestions and anything in relation to internal audit, please feel free to reach out to us so that all those can be incorporated. And today I am at Delhi because we have the council meeting over here and coming on the verge of completion. But I thought, let me address all of you. And with this words, once again, I welcome all of you to this webinar on internal audit. Thank you very much.
Thank you so much, Preeti ma'am. Thank you for your kind words as always. And you're always there to inspire us and give us light how and where to move. Let me welcome all the participants. Our speaker for today, CA Purav Gala, who's been with us internal audit is something which we don't consider it so serious and the standards are not diligently followed. But we have Sir with us who will throw light on how can we use the red flags and what kind of alert should be actually put out in our internal audit report. Just a few lines to formally introduce him. He is a chartered accountant and also and has secured an MBA from the University of Birmingham. He is a past president of IIA Bombay chapter, visiting faculty at Wellington V School, associated with the Rotary Foundation as well. With a vast 17 years of corporate governance experience with RPG, Birlas, Ellen Mitchell, and Indorama Group. With such a short and sweet introduction, I will not take too much of time from the speaker and directly hand over the session to the speaker. Welcome, sir, and please take the session forward.
Thanks, Meera. Thanks, Preeti. Always good to see you, and nothing better for the years to have you on the audit board. So I'm sure that a lot of goalposts and milestones will be conquered in the next 12 months as we speak. Uh, Good evening, friends. A lovely day out there. Before I start the presentation, a couple of things. Most of you, I presume, would be from the practicing background, and of course, some of my friends would be also from industry. First request I have for all of you. This year is a crucial year. Uh, as professionals, we should pledge in this forum that all of us will go out and vote. We are one of the largest democracies in the world. We are the largest democracy, rather. So vote you must, friends. Before anything else, that's most important. Second thing, what we cover today in next 90 odd minutes will be a lot of insightful. We do a lot of value unlocking for our clients in terms of tax, in terms of arranging for finances, in terms of filing GST returns, in terms of tax, income tax planning, direct tax planning, so on and so forth. But friends, what we miss the wood for the trees. Uh, Internal audit is one such example that gives you an overall insight on how and where can we unlock value for the clients in terms of all other allied areas that I mentioned. Some of you must be practicing only direct tax for your clients, or some of you may be filing only GST returns for your clients. But having an audit practice will not only be remunerative, but also will give you insight into a lot of other things where you can actually kind of uh, unlock value for your clients. And that's how you actually build and scale the profession to greater heights. I will just share the presentation. So what we cover today, we will try to have a lot of examples so that you can get an insight into what audit can do. I will try and maximize examples if that's fine. Do we have provision for questions in the text box? Mira, tech support.
Sorry, sir.
Do we have provisions for questions
Yes, sir.
in the chat box?
They'll be dropping their questions on their windows, which will be accumulated by me and posted to you. If you wish, toward the end of the session, will be preferable.
Fair enough, no problem.
Okay, sir.
Let me always start with this adage: in God we trust, all others we audit. Well, that's a very old proverb, and I'll prove how old is audit shortly. So, what we cover today's presentation: why is audit necessary? What are your expectations of management and stakeholders? Some case studies and significance of communication in internal audit. Friends, a lot of you must be doing audits for SMEs and listed companies as well. I think this is where you should make the most of this session, where you can actually, kind of propose a value offering to your clients. Why is audit necessary? So we define audit. We will also cover what is how this has evolved. What is the premise for existence of audit? And in today's scenario, how is IA placed? So audit is an independent objective assurance consulting activity designed to add value. I mentioned the word unlocking value, improve an organization's operations. It also helps organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance process. So who is what audit, friends? This great man, Chanakya. How many of you are actually aware that he has written a book called Arthashastra, and he introduced the concept of auditing. In fact, the auditors in his book are called copas. They were the ones who used to reconcile the tax collected and the expenses made against the tax collected. So, audit is as old as mankind. If you happen to read his book, you will actually find out, interestingly, that most of our accounting standards today resonate with the principles. You know, for instance, account what comes in. Okay, so I recognize my revenue when I receive it. Get my point? So human human or evolution audit is as old as mankind is the limited point I want to bring home. After World War II and with the progress of management science, specifically in Europe and US, when There was a concept bought in US and Europe where promoters segregated themselves and allowed professionals to run the company for them. The concept of internal audit has gained relevance across corporate boardrooms. Who is responsible for actually running the company, establishing controls? It is management. It's not the auditor. Management is charged with this responsibility on behalf of the stakeholders. And who are these stakeholders? The stakeholders are maybe promoters, it could be board, audit committee, elected representatives. It's an oversight body, and they will in turn ask the senior management, maybe the CEO, the CFO, the KMPs, to ensure that controls are established in an organization. And in turn, the management will actually appoint an audit. An effective internal audit will assist both the management as well as the oversight body, maybe the board, the audit committee, in fulfilling the aforesaid responsibilities. What is important, friends, is not fast growth or strict controls. It is controlled growth for an institution or a company, which is very, very important from a sustainability perspective. There are four cornerstones of governance: the board, the senior management, and the operational level management. Okay, now if I categorize this, it would be external auditors, it would be board, management, and internal audit. These four basically constitute the four pillars and they assess the ethical climate of a company. For those of you who work for listed clients, you will be able to kind of assimilate this. Why is this audit necessary? It plays the role of catalyst, provides insight and recommendations based on analysis of data and business processes, provides value to governing bodies and management. We will demonstrate through an example how audit can actually provide value. It is an objective source of independent advice. It's no longer now considered as a watchdog. It's a business enabler. So audit function today is no longer known as a watchdog. It is supposed to play the role of a business enabler. Before that, what we need to also see is what are the expectations of management and stakeholders from audit. Over a period of time, personally speaking, from my own experience, I've seen that today CEOs, CXOs, the audit committee chair, the board, they want to have a peaceful sleep at night. And that's why the increase in level of assurance is, the expectation is that assurance should be maximized. But as auditors, there is always a limitation. We are in the business of giving reasonable assurance. We cannot give 100% assurance. So how do we give reasonable assurance through an internal audit mechanism? Is what we look in the next couple of slides. How I plan my audit is very, very important. And what are the best practices today is what we will see. A couple of always questions that come with respect to audit or internal audit. Should audit be a cost center or a profit center? Should How is it adding value? Should the cost of audit be justified by savings? What is better, having an in-house audit model or outsourcing it to a CA firm. My view, audit can never be a profit center. Value unlocking is only a byproduct. As long as the audit is providing reasonable assurance, having an in-house resource or outsourcing it to a firm is indifferent. Desire to demonstrate value through audit is perfectly understandable. The board will really praise you when you unlock value. Okay. But value addition, in my view, should be an eventual outcome of audit reviews. It should not be the sole focus area. Your sole focus area should be to provide reasonable assurance. And there is tremendous value in this assurance. You can never justify the cost of providing assurance. So if a client of mine asks me that he is spending, say today, maybe X amount of fees um, on an inter-audit assignment, and at the end of the year he would compare, okay, what is the savings that has come out? The answer should be savings are obviously important, but what is important are that these controls are being followed. And because of this, when the controls are followed, the cost of exceptions, the cost of delimitation cannot be determined because it's a tangible value and it's invaluable. So that should be the response. As I said earlier, it doesn't matter whether it is in-house function or outsourced function. What matters is professional competence and correct approach. With limited resources, how does any audit function ensure reasonable assurance? You have been given an assignment. Obviously, you will do your maths on costing. How are you going to do this audit with limited resources and provide reasonable assurance? And that's why the audit planning becomes very, very important. So, technically speaking, a risk-based audit approach is what I've been following through donkey's years, and this is what I would recommend. It is in sync with best practices. Audit plan should be formulated based on a risk register, a recommendation of statutory audit, and requests from management, business heads, or audit committee. Formulating is an internal audit plan is crucial element of internal audit and one which requires prudential judgment. Let's do an example. So I've been approached by company ABC Limited. They asked me to give me a proposition saying that please do an audit for us. My first step would be to speak to the CEO, CFO, and ask him his view. Please tell me what are the risks a company is facing. So he tells me that look, I've got a business which is called A. The process is of capex. The risk description is that if the capex is delayed, I will end up having additional cost and it will impact my margin. As per him, the risk is extremely high for the delay. I go to the HR head, I ask him, he says compliance is a risk as per me. Because we engage contract workers in our production process, there could be fines, penalties by government authority. Because contract workers cannot be allowed to be engaged in direct production activity. As per him, this is an extreme risk. Given I've got a lot of plants, the client has got a lot of plants. Then you go to another business head. He says for him, working capital is an issue. Okay. Product margins for his business is negative. There is higher lead time for sourcing materials. Realization of receivables is extremely slow. There is a stress on working capital. He, in fact, even mentions that business continuity impact is also um, possible in corporate. Then I go and meet the tax guy or the CFO. He says, boss, I've got a problem in taxation. My additional sales tax penalties could be, kind of would have been required to be paid by the company if Form Cs are not correct. I'm just giving an hypothetical example. So what you need to do is meet people over a period of time and understand each function's risks, articulate those risks, and jot it down over a piece of paper. What is the next step that we will do? Is this data enough? Maybe you can write in the chat box if this data is enough or not. I think something is missing. What is missing? Materiality. This is a word that most of the auditors are familiar with, or most of us professionals in the fraternity are familiar with. So what I should do? Put one more box and put the materiality in question. Now this will help me to plan my audit. Now I have the four risks again, and then I have the materiality in question and also the risk rating. So which area will I cover first? Will I be doing the first out of this four? Which will I prioritize? Suppose I need to finish this assignment in 2 quarters with limited resources. Should I do SVU A or SVU B first? Anybody can write the answer in the chat box. Is the chat box visible, Meera? Meera, is the chat box visible to you? Anyway, when she comes back. So should I do A or B? I should do B first. Another area that I would cover along with B in first quarter could be human resources. And then I could do A and corporate finance. So this is how an audit plan could look like. And apart from this, you can always do an audit of an exceptional area. Most of the times, most of the corporates, from my experience, do not undertake review of these areas. Rewards recognition, leave pattern of employees, security systems, surveillance systems, insurance claim settlement.
Yes, sir. Sir, tell me.
Yeah, fine, no problem. ERP login review, guest house expenses. Another area that I would cover. There will be many working in this for sure.
Hello.
Yeah, Meera, I was just asking because I had asked the participants to write it in the chat box. Could you see somebody writing in the chat box? And apart from that, you can always do an audit on the response to formulating an audit plan. My I think there's some background noise. Anyway, so is this clear on how would you go about formulating an audit plan? We spoke audit is no longer a watchdog. If the expectation is for auditors to be the business enablers, then it is equally important for auditors to participate in all key stakeholder meetings. Okay. It is equally important that the C-suite people have and provide access to audit. Audit should also have the freedom or the liberty to organize training sessions, not only for their team but also for the auditees. How many of you actually propose to clients that look, we will train your staff on following certain SOPs, be it tax, be it it could be accounting as well. Do we make an annual presentation on key achievements to the executive leadership? How many of us actually, solicit feedback from auditees? Because per se, audit is always has a negative connotation. It is always good to have rating systems which can be incorporated in audit reports. A good practice would be to have an audit charter, audit committee charter, use of tools. So we do work with tools like Qualtrics, where I can actually simulate or maybe a BI dashboard, where actually I fix the parameters and it throws up deviations from big data. And that actually helps us to provide reasonable assurance. One more important thing is following up on an audit report with respect to action plan. Again, there is value on nothing here. Ideally, if it is a listed company, the audit committee, internal audit should be reporting to the audit committee. Administratively, maybe to the CEO, CFO, or managing director. Reporting structure actually demonstrates the company's perspective on corporate governance. How efficient are your follow-up reports? This area actually needs focus. Most of the auditors I've seen from my experience, once they issue the audit report, it finds its way into a cupboard.
So you were asking me about the chat box. You're talking about the chat box with the participants. There seems to be some technical glitch with Sir. Just bear with us for a couple of minutes as we get back.
Hi, my apologies. There was a technical glitch.
Hello.
Yeah,
I
Mira,
just received a question from Ashok Jain. There, the
sure.
sound and volume issues were there. I hope it is better now, sir. Just drop me your message again to ensure that now you are able to hear correct clearly. Continue, sir.
Mr. Jain, is the voice okay now? Shall I increase the volume? Thanks, tech support. Is the screen visible?
Yes, sir.
So, how efficient is your follow-up report? I think this is one area where actually most of the auditors kind of miss the bus. And in fact, you should be insisting your clients to also focus on this area. Let's come to the most interesting part of this session, case study. Mira, if you're there, it will be good for participants to kind of respond on the chat box. Those are some of.
Sir, couple of them are responding,
Okay, sure.
but then that comes to me with a lag of a few seconds, and then once I revert back to you, that coordination will become difficult.
No problem. Do capture the responses and maybe you can kind of show me a thumbs up on the screen. I will move on to the next example.
Okay, sir.
So, couple of case studies. One is on procurement. Friends, what is important is having an audit mind. Why and why not is a very, very important word that an auditor should focus on. They should, they should be using this without any hesitation. So let's do one thing. I'll do take a dump of a purchase register for a company. This is a PO number, purchase order. This is the order date and the time when the purchase order was generated. This is the name of the supplier. This is the item or the SKU. This is a price. This is a quantity that has been ordered. Against the ordered quantity, I have also mapped what has been received, what is pending to be received. The last column mentions about quantity billed or invoiced. That means how much of liability I have created in my books with respect to the material that has been received. Tell me what is incorrect in this data. As auditors, how will you unlock value here? Participants may put their responses in the chat box.
In the meanwhile, I'll just put across one request come from one of the participants, Anil Pant. They were requesting you to throw more light on the slides that are shown rather than moving it fast. If it is possible, you can take it up.
Sorry, Meera.
The slides are taken very fast. Can you please try and elaborate the content? This is the
Sure,
comment received.
sure,
Yeah. Thank you, sir. And I've not still received any feedback on the interaction which you were looking out for.
sure. So I'll pause for a minute or two, let the participants have a look at the purchase register and then give their comments. Look at the data thoroughly. I'll repeat, it's a PO number.
Uh, Shobha ma'am just says invoiced quantity is more. Also, rate is more in the last case
Hmm.
at
Correct.
290 instead of 240.
Correct. Fantastic. Anything else? Along with 290, what do you see? Can you see the time?
9,500 and 9,600.
Correct.
K. Sanchal. Acha, Chaman Lal.
What else can be seen? Look at the time slots when
The
the
time
purchase
of
order.
the last order is out hours, which is unusual,
Correct.
by P. Anil Pant. And we have Kinjal Joshi stating in the third PO quantity received is 9,500. Quantity billed is 9,600, which is incorrect.
Right. So my next question to all the participants is, from a policy perspective, what will you go and tell your client, or what will you go and tell your maybe business head or a CFO? What changes will you propose to the existing controls, whether it is in the system or as a policy, and how will you unlock value here? What changes will you propose? What locks will you propose in the system? What policy change will you recommend in the system? Think and put it in the chat box.
Three more responses received for the earlier question. One is for the third item, the billed quantity is higher than the received quantity, which is the repetitive of the earlier one. 16th Feb PO quantity billed and unit price issue. And the third comment is inward time after 11:30.
That is a pure conditional time 11:30. Correct. But my question again, I'll repeat. What will you go and tell your client? What will you go and tell your CFO? Boss, I found this data. I think we need to put this docs in the system. We need to make a policy correction at this level. What would we do? Is what I'm interested to hear from all of you.
Tagging of invoice with the PO in the system. Laban Banerjee. Was I audible?
Yeah, yeah. So what should we be saying to our client or my business owner? First of all open purchase orders should be subjected to periodical review. Purchase orders should not be kept open. There is a concept of FIFO. The supplier is same. If I have raised a purchase order against same supplier and then again I repeat the same PO, whatever material comes in, it has to be knocked off on a FIFO basis. If not, then the existing purchase order must be cancelled. In this case, it's a red flag. The buyer is playing with the ERP system because there is no lock to kind of or a control in the ERP that will prevent the user to ensure that he cannot override the GRN quantity. The 9,500 should match with 9,500 of liability. It cannot exceed the received quantity. Trust that is clear. We'll move to the next example. Sales. Okay, so we
There
are
are a
looking.
couple of responses.
Sure, Meera.
Hence, they mentioned procurement system controls should be revisited. Quantity received and tax invoice should be the same. Quantity validation required. Recommend preventive controls such as system validation,
Right.
time validation.
Okay, I'll move to the next case study.
Yeah.
So we have a company X, and this is the volume and quantity discount policy for company X. Okay. So in company X, we are analyzing product P. We have the order quantity for product P on the screen, and then we have a discount rate on the selling price. So if a customer is ordering, say, 5,000 quantity for product P, we be entitled to 5% discount rate. If it is more than 5,000 quantity, then he will be entitled to 10% of discount on selling price. Basically, this is a discount slab for product P. So when you review the sales orders, okay, for a particular month, you come across this data point. The data point says customer name, the order number, item code in my ERP. What is the description? That is product P, the order quantity, open quantity, selling price, order date, and the discount offer. So,
I've received a couple of responses, but I'm a little confused if they are related to the earlier question. I'll just read them out. Authority approving the invoice bill needs to see verify valid documentation of quantity received. Also, the control for raising the PO should be changed. For example, if the timing is outside the working hours, an error message should be popped and same should be informed to the inventory head.
fair enough, you can slice and dice. The
Uh,
idea this pertains to the earlier example, Meera.
yes, I feel so. And I've not received any further.
Right. So we'll focus on this case study now, friends. Um, this is the order quantity. This is open quantity. Open quantity is the one which is pending to be dispatched. The selling price, the date of order, and the discount offer. So, as auditors, what will be your when you review or come across this data? What will you do?
No feedback, sir.
Will take the time. Okay. So let me simplify for you. I have now further sliced and diced the table. What is definitely those data points which are worth for probing further? And as an auditor, what will you go and suggest to your client?
I've just received one feedback.
Tell me.
Uh, Plavan Banerjee sir says discount allowed is not related to the quantity sold but on ordered quantity, which needs to be.
Fantastic. Fantastic. Super. So there is a flaw in the policy. Anyone else?
It's like same as earlier. Incorrect discounting principle set in the system. It should be on
Hmm.
actual dispatch.
Right. Anyone else think?
Uh, Kinjal Joshi ma'am says if the entire discount is offered at the time of first order and major portion is lying in yet to order, discount percentage offered is not justified and company might incur losses. Chamanlal sir says first and fourth had get wrong discount. Neeti ma'am says what is meant by open quantity. He has a question on that.
Hmm. Open is which is pending to be dispatched. The ordered quantity is 17,500. This sales order was raised on 11th April 2010. Order is for 17,500. 5,500 for product is dispatched. 12,000 is still pending to be dispatched. Then how come am I allowing the same? If you look at this last line, I have dispatched 7,000. Okay, against this orders. So should not there be a FIFO method for dispatch? So this ideally this 7,000 should have been knocked off against the first order only.
Sorry to interrupt. There's a message from Jyoti ma'am saying you're unable to hear, but ma'am, the voice is clear at our end. Just check your system on your earphones. Maybe some technical glitch out there. Sorry, sir. Continue.
Yeah.
I have a reply again from Plavan Banerjee, sir. Multiple orders taken when previous order is still not serviced.
No, Prabal, orders can be taken, but it's actually the dispatch principle that is important. I cannot prevent customer placing order on me. That is good. But what is the lacuna here is this 7,000 of dispatch against the last order is being allowed when the first order is still open.
There is a response from Shobha ma'am. All discount given is incorrect. He just pauses out here. No further clarification.
No
And
problem.
I have Pooja ma'am stating open quantity should be closed before the next order, which exactly you just mentioned.
So, okay, let's summarize this. Friends, so this is how value unlocking gets done. So, I'll go and tell my client, I'll go and tell my business head, look, we need to change the policy on sales discount. Bulk orders 5,000 and above could be dispatched at one shot. Also, in case the customer does not lift material against confirmed bulk order, discount structure will stand revised. Or maybe I can tell that FIFO basis should be used in my system, so on and so forth. So articulation of deviations is very, very important. And that's how you can demonstrate that you are not only fortifying the system, but also adding value.
So there is a feedback from a couple of people. The answers which they have provided earlier, they would just like to get an iteration on whether those are in the right direction or no.
Yes, yes, absolutely.
Okay.
The examples, the only point, you of giving examples here is to kind of uh, acclimatize you to have an audit approach. Any suggestions that you put into a client, the approach is absolutely fine. Because understanding the business of the client is important. I've just given an hypothetical example for you to actually demonstrate how auditors can unlock value. Okay. Most of you actually, when you do audits for clients, do you look at their, maybe some of the clients could be using Tally, some could be using Navision, somebody would be using SAP, somebody would be using Oracle. There are a lot of options available in the market, irrespective of the ERP they use, irrespective of whether you do a stat audit or an inter audit. Friends, my advice is always evaluate this area without fail. What are the roles and responsibilities given to users in their respective ERP? Absolutely no compromise. Please cover this area. And I will demonstrate through an example how you can actually unlock value or how you can actually get some data to probe further, investigate what are the kind of red flags that can potentially come. Again, a hypothetical illustrative example for all of you. So we have a module called purchase module, and then it's called purchase, maybe it's for the PO user. It allows the user to generate a purchase order. The functionality of this module, one of the functionalities is it allows the user to generate a purchase. Then we have the stores module. It allows the user to generate goods receipt. Then we have another of the stores module with an additional functionality which allows the user to issue material for production. So purchase module allows the user to generate purchase order. Stores allows user to generate receipt note. Stores also allows the user to issue material for production.
One suggestion received from Chandrakanta ma'am: discount should be adjusted taking into account the total quantity purchased in the year.
Sure. Super. Okay. Let's evaluate this. So you have an auditee. He is responsible for a particular SBU. He has been assigned purchase module rights. He is a purchase PO user. Again, you have the auditee one. He is also assigned the rights to operate the stores module. And within that, he can receive inventory, create a GRN. And then we again look at auditee one, where he has been assigned the responsibility of issuing this material. Similarly, you have auditee 2 and 3 who have been given access rights for generating PO, receiving inventory, and also accounting for issuance of that inventory. So when you look at this data, what does it strike? What is that thought that comes to your mind? Is there a potential red flag possibility here? Please think and put the response in the chat box. Give me a moment. I'll just have a glass of water.
None received as yet. Actually, I just monitored that the delay which is happening of this session is like around 10 to 20 seconds delay. No, there's that lag. So we'll need to wait. There's one response from Kinjal Joshi. Only viewing G rights should be provided to the auditor and not editing or creating rights.
Sorry, I missed. Mira, can you repeat?
Kinjal Joshi ma'am says only viewing rights should be provided to the auditor and not editing or creating rights.
Super. Very nice. Which one? Which user? Oddity 1 or Oddity 2 or 3? She has not specified that.
No, not specified. There is further only authorized person should have the right to edit or create the system. Continuation of the earlier one.
Anybody else?
None, nothing as yet.
Okay, fine. Friends, again I said, please um, make sure that you cover this area, irrespective whether you are an internal auditor or a stat auditor, or whichever company you do, however small and big.
None of the auditors should have editing rights. Is what comes from Neeti ma'am.
So this is an auditee, this is not an auditor. The auditee here actually has got the right to create purchase order, receive inventory, and also issue the inventory. That means there is a very high probability that I could raise a fictitious PO. I could create RN against that PO, and I could issue the material against that PO without the material coming physically to my plant or to the desired location. And here the problem is in auditee 1, not in auditee 2 or 3. Auditee 2 and 3, there is still some level of control because the person raising the PO and the person receiving the material against that PO are two different persons. Please scale up with your knowledge as far as this area is concerned. It is called segregation of duty. As auditors, you need to find out if there is any conflict in segregation of duties with respect to any area that your client is.
There is one findings by Ayushi ma'am. Username 111 have all the rights, therefore check and balance authorization is missing.
This is precisely what I said.
And Joshi ma'am continues her earlier query with auditee 1 has conflict right to create PO as well as inventory man.
Okay. One more example on ERP controls. So a company X uses a ERP Y. Okay. When I create a purchase order in the system, the user is encountering two options: to set the maximum limit for over receipt of material in percentage against order quantity, or to leave the field in option 1 blank. So a lot of times, let me tell you, there are materials that come in bulk powder form. So if I raise a PO for maybe 10 tons, it is possible I could receive maybe 11 tons. I could receive 10.5 tons because you cannot measure exact. Comes in, it's a free flowing material. For example, powder, resin. Obviously, to ensure that um, the purchaser does not complain about short quantity, it's a business norm that some extra quantity is packed at the time of dispatch because suppliers also factor in some percentage of loss in transit. So coming back to the example, I'm a purchaser for a company X which is using an ERP Y. When I'm creating a PO, I've got two options. I need to set the maximum limit for over receipt of material in percentage against the order quantity. I leave that option blank. So what comes out here is this data. So supplier name is there, purchase order number is there, purchase order date is there, item code is there, item description is there, quantity of PO or PO quantity is there, quantity that is received as per GRN is there, quantity billed is there. When I say billed, it means what is received and liability created. Whether there is over receipt tolerance which has been set in ERP, no, not set. Then we have excess quantity received and invoiced. And buyer is say maybe one Mr. Purity.
Uh, I've received a couple of responses. I believe it are for the earlier one. Just confirm them. Here, the end-to-end process should not be performed by one person by Veena Hingraj.
Right.
Uh, Shobha ma'am, I apologize, but I had found just one message from you earlier, all discount given to incorrect, which was read out. I am not sure why you put up that the messages are not read. In case there's anything, I'll again put it out. You have put out another message stating there should be maximum limits or percentages ranging from 1% to 5% as tolerance limit. Then we should not leave a field blank. It makes quantity unlimited. The amount may exceed their authorized limit. By Veena Hingar.
Fantastic.
And Chamanlal sir, first one, if extra need, then higher authorize it.
Right. So friends, again, I'm just giving you and kind of acclimatizing you through very basic, simple controls of ERP. As you go in depth, I mean, there are a lot of um, instances where you can actually probe and unlock value. There is something called a concept of super user. So what typically we do is we do annual review of the audit trail of the super user. What kind of activity has he undertaken? And then we have
Shobha ma'am extends her query to tolerance limits should always be set in the ERP system.
fantastic.
Laban sir says maximum limit should not be blank in ERP. It should contain some value mandatory.
So what will I go and tell my client or my business head? What is the solution that we are offering? Very easy to point, but I think people will respect you only if you offer a solution. What is the solution that you are bringing on the table?
No responses as yet.
Um, Friends, the limited code I'm saying is easy to find out. Yes, these controls need to be there or are not there. The solution oriented approach is equally important. So I think if I were an auditor, I would have told uh, those All the materials in the master should be reviewed. Tolerance limit should be set for each and every material that is subject to I'm receiving if the material is in pieces which are countable, then there is no question of over receipt. Only if the nature of that material warrants over receipt, then only the over receipt tolerance should be setting here. Otherwise, very easy for a purchaser, to collaborate with a colleague who is in the purchase department and keep sending extra material.
Here, the unique purchase order number is not there in case study 4. Question is not clear, as pointed out by Veena ma'am.
Again, this is an hypothetical example. Purchase order number could be different.
There is one from Shobha ma'am. System changes and tolerance limits should be set in the ERP system. Tolerance limits should be reviewed periodically.
Fantastic, very nice.
Anil sir says, how can one PO number have different purchase order dates?
No, my apologies. The while cut and paste, this number has got kind of uh, engraved in this. So these are all different purchase orders.
Excess receipt will increase the cost policy be framed or not required by the concerned authority.
Right. Do you want more examples or should we move on to theory again? Just a quick message or a heads up. What time do we wind up, Meera?
The session closes at 7.
Hmm.
So you might give us some time for question and answers. Although still now there are no questions as such, they were just interactions with you. So I don't have any accumulated questions as such till now. You can
Right.
continue till 6:45 if you wish, unless there are any
I
further questions.
I have a hard stop at 6:45.
Yes,
So
sir.
we'll try and close it before that. So quickly, let me move on to the next example. You need analyze this case study and tell me how a fraud can happen. Shall I read out?
Yes, sir. Even they are suggesting for more case studies.
Okay. So we have a company X which provides canteen facilities to its employees. Canteen is managed by a contractor Y. So every employee is given a meal coupon.
Uh, there is one suggestion for the earlier one.
Tell
In
me.
case, just before starting, I'll put it across by Veena ma'am. Larger purchase orders may need a 4I approach. Smaller orders may have a batch approval too.
Super. Very good. So that's the limited point I wanted to draw home, colleagues. Having that approach and unlocking that approach and then demonstrating it to your respective auditees, clients is absolutely important. This is how you can actually unlock value. I'll read out the example, and you need to tell me how a fraud can happen. This is something that I have personally kind of, I mean, this is something that we have observed a couple of times in my experience in real life scenarios. So you have a company X, and that's why I'll just kind of um, draw you back. In the initial period, I said that when you plan an audit area, Take up one area which is never looked upon by the management. It could be admin expenses, in fact, ERP login review, because a lot of times people share their passwords, new pattern of employees. It could be this canteen management, could be even admin facilities. It could be vehicle management, and definitely you'll find a surprise there. So this canteen facilities is given to its employee. Every employee is given a coupon booklet with 26 coupons. Booklets are serially numbered. If I have been issued a booklet with number 2000 for the month of March 24, all 26 will contain the number 2000. There is no expiry date of the booklet. Very important. Employees can continue using the coupons till the booklet gets exhausted. In a month, if I decide that I have meals in the cafeteria 20, then I'll end up using 20 coupons. The six coupons can be redeemed in the next month. The charges for the booklet are deducted from the employee's salary. The employees submit the meal coupons to the canteen contractor. Contractor collects the coupons. Company is invoiced by the contractor from total coupons collected and on the rate fixed for each meal coupon. Coupons issued to employees have been correctly deducted from their salary. Very important. As far as this portion is concerned, of issuing coupons and deducting it from their salary, it is absolutely fine. There is no anomaly. So you have to tell me, friend, where and how someone can play around the system. What could have gone wrong?
We have a response from Kinjal, ma'am. The company has already deducted meal charges for 26 coupons from the salary. Company will
Hmm.
be billed as and when the coupons are used, and the contractor bills the company.
Very good, Kinjal. So let me come to the next part of the story. Bills, invoices are submitted by the contractor on a monthly basis. Invoices mention the number of coupons and the agreed rate per meal coupon. There is no process to verify the bill and corresponding coupons. Payment is made by accounts directly to the contractor based on the invoice. Please configure now how and what kind of fraud can happen. Kinjal, thanks for the question. That was what was expected. Good.
Coupons may be concessional, may be sold to outsiders.
I will
But
repeat. I will repeat this slide again. The bills and the invoices are submitted by contractor on monthly basis, along with the coupons. Invoice of the contractor will mention the number of coupons and the agreed rate per meal. There is no process to verify the bill and corresponding coupons submitted. Payment is made by accounts directly to the contractor based on the invoice. Please configure how and what kind of fraud can happen.
excess salary deduction for coupons, as there is no serial order control. It should be continuous across the employee. The expiry date should be mentioned by Shobha ma'am. Veena ma'am continues, employee and contractors may connive there is no reconciliation.
Super. The first response was from
Shobha ma'am, excess salary deduction for the coupons.
very nice, Shobha.
I'll repeat it again. Excess salary deduction for the coupons as there is no serial order control. It should be continuous across the employees and the expiry date should be mentioned by Shobha ma'am, Shobha Parvati.
Partly right.
Sorry?
She is partly right.
Okay.
There is no coupon control. What can happen? Somebody has to articulate what exactly can happen.
Uh, just a sec. Ex- uh, no expiry date on the coupons might raise an issue. For example, coupons issued in the current financial year used in the next financial year by Kinjal Joshi. Pooja
Mhm.
ma'am says contractor can issue invoice for higher number of coupons.
Who says?
Lavan says,
Who says that?
Pooja ma'am, Pooja Kulkarni.
Yeah, yeah.
Contractor can issue invoice for higher number of coupons.
Hmm. How will you do that? Pooja, that is where I want the answer. How will you do it? Partly right again.
Lavan says no cross verification of coupons with the bills. Also, it can be billed in multiple months by the contractor. Ayushi ma'am says contractor can bill the coupons with higher rate meal irrespective if it relates to expensive meal or not. So company will lose money. Chandrakanta ma'am says coupon booklet is not serially numbered. Coupons should be submitted to the canteen manager.
Hmm.
Rishika Rangan says contractor should manipulate the number of coupons. Or the contractor could manipulate the number of coupons.
Yes, but
Sri
how?
Krishna says
How? Hold on,
submitted
Mira.
coupons can be reused. Sorry?
Hold on just. So how can he manipulate the coupons is my question. Any answer?
Submitted coupons. I mean, they are again the same type from, but how it can be fake coupons could be submitted for billing since no cross checking is happening.
All of them are very close, Mira. But they need
Yes,
to tell
yes.
me. They need to tell me. They've kind of configured, but they need to tell how and what. Very close.
There is one which is also on the same line. The contractor can collect amount for the whole coupon book, whether they were actually used or not.
See, everybody said that contractor is over invoicing. Perfect. But how will he over invoice is my question.
Coupons may just be given to the contractor without actual supply of meal.
No. Okay. So in this case, the contractor, what has he done? He himself got the coupons printed. Apart from what from employee, and that's how he played kind of you know a fraud on the company. How did we find out? In this existing framework there was no process, so what we did was we analyzed it from that perspective. 100 employees or the number of employees that were present in that location, maximum number at any given point in 1 year. Presume all of them had lunch every day into number of coupons. Then also the number of coupons that were submitted by the contractor were double, and that's where it caught our eye. Is it clear, friends? Let's move to the next. My limited point again here, I would like to drive home. Please take up such small areas which typically escape human mind, human eye. Okay, let's come to the last part. Communication, very, very important for the auditors. We are the only function that has access right from top to bottom, and we are responsible to have an independent approach. Hence, listening and communicating are of paramount importance. So, how many of us actually, kind of network with the auditors after the office hours? You go and have a cup of coffee, understand what are his pain points. So, there's a video, but I'm told that I'll try and circulate or share this video, the link of this. It actually shares the do's and don'ts of auditor communication. Audit report is the most crucial part of an audit review. Are we reporting sensitive observations? Friends, let me tell you, on an average, the CEO, CFO will not give more than 5 minutes. You work hard the entire month, your report will be read and consumed in 5 minutes. Your audit report should have an executive summary. And does your report actually catch the reader's attention in the right spirit that is compelled to take action? So some important points. General background of the area reviewed. The report should contain the general background, audit observation, impact risks and recommendations, management response, agreed action plan. A covering letter should be preferably issued with the audit report. Do you also mention appreciation for auditees who have actually supported you? There is no issue if an auditee is disagreeing with your observation. We can always agree to disagree. That doesn't mean that you need to copy an observation as long as you have the right conviction. Along with business articulation. We take a sign off from auditees that yes, you agree to the observation. Does your report state the date of committed action, responsibility assigned for committed action? Does it link the risks with inaudit observations, likely impact? Does your report quantify potential economic benefits, confirm loss? Does your report mention limitations? Do you issue a discussion draft report? This is what our insurance standard says. Am I issuing a discussion draft? Am I issuing a formal draft? Am I issuing a final audit report? Okay, let's do the last example for the day before we wind up. I want you to actually draft an observation on this data point. You're doing an audit review for a sales function of division X. Sales is for the period April 10 to March 11. 500 lakhs, 5 crores. Out of which I'm selling to direct customers 3 crores, to distributors 2 crores. Number of distributors 20. Okay. Your interaction with process owners and business head actually confirms that company has not inked agreements with the dealers and the distributors. Okay. So for 200 lakhs, I have not inked any agreement. So can somebody write an observation saying what exactly can is not done, needs to be done, why it needs to be done, impact and the risk of not doing it, management response and agreed action. So most of the auditors actually need to upscale on this area. So there, I mean, you need to be a carpenter to make sure that the molding of the report is absolutely truthful, fair, and undisputable. It should compel the auditee to just pick up phones and get done. How will you demonstrate is very important. The only option that you have is your audit report. The only brahmastra or the only weapon that you have is your audit report. So articulating it is very, very important. How will you do it? If I ask you, read the left side and make a mainframe observation, a recommendation, impact and risks, and management response and agreed action plan. I'll give you 5 minutes. You can put it in your chat box. All the 4 points. Is that fine, Meera?
Yeah, I have one response from Anil sir. He
Hmm.
states capturing the root cause for the issue is in the report also is important.
Absolutely. Please, please put the root cause also. Okay, set the timer. 5 minutes.
Yes, sir. It's 6:32 now.
Just give me a minute. Yeah, any responses or we still have
Yes,
time?
I've just received one response.
Hmm.
Just a sec.
We should never use any subjective language. We should always be objective.
Yeah,
Most of the auditors lose out on this.
yeah,
The
this is
moment
response
your
from
report,
Kinjal.
hmm,
Sorry.
yeah, the moment your report is subjective, you will lose the interest of the reader.
Kinjal ma'am says sales of 200 lakhs is not backed by an agreement and
Uh,
company might face dispute in future at the time of collection if customer refuses to make the payment. The recommendation is before providing service, company should ensure if agreement is in place or some MOU is undertaken.
Very good, Kinjal. Very good. Couple of more responses, and then I will show you
Oh, yes.
the ID language. Yeah.
I have from Kinjal ma'am again the impact of that shall be financial risk at the time of collection, resulting in risk of revenue recognition and higher amounts shown in the data.
Super. Very
I
nice,
have
Kinjal.
a response from Chandrakanta ma'am. Retail business, wholesale business, and dealers are low. Quantum sold to dealer is low. Agreement not drawn. Cost incurred to reach customer. Benefits given to dealer.
No, that is again a business perspective, ma'am. We should only focus on controls. What is the risk to company? What is the financial leakage here? Optimal or maybe an opportunity to um, leverage on finance. See, again, understanding business is very, very important here. When I sell to dealers, what do I do? I will not sell to dealer directly. I will do some due diligence. I will collect some deposit.
There is a response from Veena ma'am. Agreement with dealers provide a legal framework for the relationship between manufacturers or distributors and their dealers. By outlining the rights and responsibilities of both the parties, these agreements foster a collaborative and mutually beneficial partnership. The company has not entered into dealer agreement and is therefore missing out on its benefits and the possibility of taking legal action in case of an untoward incident.
Super. Very
It
nice.
can enter an agreement and leverage its benefit, risk, loss of money, and bad.
Super. So the audit observation typically could be like this. The headline should be itself prompting the reader to look and probe further. Agreements not with dealers. There is a potential opportunity to improve working capital scenario by dash lakhs. If I were the CFO, I'd start, oh, where is it? Let me read. What is it? SB is selling products directly to customers and channelizes sales to appointed dealers. Total sales for 20 dealers is derived at this much, which constitutes 40% of total sales. For details, refer annexure. Absence of written contracts agreements implies increased financial and operational risk for the business unit. An opportunity to improve working capital exists in lieu of security deposits, which can be obtained in case agreements are inked with existing dealers. For details, refer Annexure B. Recommendation is agreements act as a medium to ensure fulfillment of performance between two parties, and in case of legal dispute, they provide official discourse. Division should ink agreements with all 20 dealers on a priority basis. Someone was mentioning the risk and impact and the root cause. So, risk and impact is very important. Financial, operational. A financial risk is non-obtainment of security deposit increases credit control risk. Interest on security deposit amounting to dash lakhs can improve working capital efficiency. No control over dealers in case they push sales of competitors' products. Increased risk of reduced bottom lines since dealers are not communicated in writing the minimum sales price at which they can sell to customers. Operational, territory or customer specific rights cannot be assigned. Absence of control over periodical budgeted target sales to dealers. legal risk arising out of dispute. What is the management response? The S noted the SBU is in the process of initializing legal agreements with all its existing dealers and distributors. It is also contemplating on obtainment of security deposits from appointed dealers. Responsibility and target date. This is how a typical observation should ideally look like. To the point, minimum or zero subjectivity, absolutely objective. Right. So that's it. We've wrap up today's session. We have covered how audit can unlock value, how audit can provide assurance, how audit should approach analyzing data, identifying red flags, what could be potential areas of fraud, how do I communicate effectively through audit reports to the stakeholders. I'm open for questions for next 5 minutes. Happy to assist. Thank you for your patient hearing. I hope we had an interactive session and I could keep you engaged. Meera, over to you.
Yes, sir. We'll wait for a couple of minutes for questions and then we'll wind up.
Sure. You can always reach out to me in case at any later point of time you have any question on audit at puravgala@gmail.com.
Great. I don't find any questions flooding up. There are basically just feedback for your session. They're nice session. Thanks. Thank you so much for an interactive session. So I get very good feedback for the session and thank you very much for really making it interactive in spite of the format of the session being a one-way kind of session. We've tried to accommodate as much interactions with you and also with the participants. Participants, please forgive us in case we have missed out any of your communications. You can definitely reach out to us at ICI as well as Purav sir directly. We'll be happy to help you for anything and everything. Thank you, Puravji, for giving such a patient and peaceful rendition of your presentation with real life examples and how do we actually flag out the queries therein. This was really very, very interactive. All those who participated actively are really thankful for it and thankful from the side of the institute as well for sparing your important time with us, for taking up this session and sharing your experiences. Thank you very much. Thank you all the participants for being so interactive. In spite of the glitches from our side, you all were really patient and you all allowed us to display and to bring out all your queries. Thank you. In case of anything, we are here to help you. Thank you, sir. Thank you,
Thank you,
participants.
everybody. Thank you, everybody. Please make sure that you vote. Okay. Thank you.
Purav, sir, there is
Yeah.
a question whether the presentation will be circulated. If I'm not wrong, this presentation will anyway, the entire video also will be available on the institute's website. So you all can visit there, and I'll check out Purav sir if we can circulate the PPT as well.
I will share the links as far as the videos are concerned for sure.
Yes, sir.
I will get back to you if I can circulate some of the portions of this. So,
Yeah, any which ways, this entire presentation along with the PPT which is running through the during the presentation is available on the video which can be viewed later on. So
yeah, this
definitely
can
you
be
all can
viewed. Yeah,
review it again.
sure. Thank
Right,
you,
sir?
everyone. Thank you. Thanks, Meera.
Thanks.
Thanks,
Thanks.
ICI. Thanks. Bye.